So in this video, I'm going to discuss 5 best ETFs for long-term investors. These ETFs will help you in building a portfolio for long-term wealth creation. Now, even if you're a beginner or have recently entered the stock market, this video will be very helpful for you. So please watch the complete video for a better understanding. It's going to be an informative video. Okay. So ladies and gentlemen, welcome to my channel. Now, the first set of ETFs which I shortlisted is from the Nifty 50 index. Now, it invests in the top 50 stocks, 1 to 50th stock of the Indian Stock Exchange. Now, you can watch on your screens, I have shortlisted 2 ETFs from this index. One is Nifty Bees from Nippon India and 2 Nifty IETF from ICICI Prudential. Now, please remember, for investing in any ETF, there are 2 major points which you need to check. 1, volume, and 2, expense ratio. Volume should be higher the better, and the expense ratio should be lower. Now, by looking at the volume, we'll come to know the number of buyers and sellers. There should be enough liquidity so that on any day, if you want to sell your ETF, there should be enough buyers. Now, a high volume ensures that there is enough liquidity in that particular ETF. Okay. Now, whatever ETFs I shortlisted in this video, I have ensured that there is enough liquidity, and also I have ensured that the expense ratio is also low. Okay. Now you can watch on your screens the list of ETFs which I have shortlisted, and also I will explain you the volume and expense ratio in detail in this video. So please keep watching. Okay. Now the first ETF, as I discussed, is Nifty Bees from Nippon India. Now you can see its benchmark is Nifty 50, and very important, today's volume. The day when I am recording the video, today's volume is around 30 lakhs, which is a very huge volume. So is it enough that we just look at today's volume? No, we have to look at least for the last 3 months volume for any ETF. Now you can see on your screens, the last 3 months volume for Nifty Bees is around 43 lakhs, again, which is a very huge number. To find 3 months volume, you have to do one thing. Just watch on your screens, go to NSE website and enter the ETF symbol. You can watch on my, the Excel sheet, ETF symbol. Here, the ETF symbol, for example, is Nifty Bees. Enter Nifty Bees in the NSE website and then go to historical data. Now you see in the historical data, you will find the volume 1 month, 3 months, 6 months, 1 year. All the historical data you will find here. You can watch this. In this way, for any ETF, you can find the historical data in the NSE website. Clear? Now, for Nifty Bees, here you can see 3 months average volume is around 43 lakhs. That means what? On any given day, this ETF has sufficient volume. Okay. Now, after volume, what is the next important thing which we have discussed we need to look into? That is the expense ratio. Now, for Nifty Bees, you can look at the expense ratio. It's 0.04%, and this is one of the lowest in India. Just with this 0.04% expense ratio, you can invest in the top 50 stocks of our Indian Stock Exchange. Okay. Now, next ETF, that is Nifty IETF from ICICI Prudential. Again, the same thing. We'll look into today's volume. It's around 4 lakhs, and last 3 months volume is 4 lakhs. Now, what is the next important factor you're going to look into? Its expense ratio. You can see on the screen, the expense ratio is 0.02%, very low. Now, you can compare the returns of both the ETFs for the last 5 years. It's almost the same. There is not much difference. Now, you can choose any one ETF from amongst these two. And if you ask my preference, obviously it will be Nifty Bees from Nippon India, because it has high volume and high liquidity. Again, this is not a recommendation or not a push from my end. Both ETFs are good. You can choose any one from these two. Okay. Now, the second set of ETFs is based on Nifty Next 50 Index, that is Nifty Junior. Again, I have picked 2 ETFs from this index. You can watch on your screen. Next 50 I ETF from ICICI Prudential and Junior Bs from Nippon India. You can see their benchmark is Nifty Next 50. Now today's volume of ICICI Prudential ETF is 7 lakhs. Last 3 months average volume is around 7.5 lakhs. The expense ratio is 0.10%. Now look at the today's volume of Nippon India ETF. Today's volume is around 3.5 lakhs and the last 3 months average volume is around 2.5 lakhs. The expense ratio is 0.17%. Now if you look at the returns in the last 5 years of both the ETFs, there is not a much of a difference. So here, in my opinion, both the ETFs have good and sufficient volume. You can invest in any one of the ETF, but my personal choice will be ICICI Prudential. Again, this is not investment advice. You're free to invest in any one of these. Both are good ETFs. Okay. Now, the third set of ETFs is based on Nifty Midcap 150 Index. Again, I have shortlisted 2 ETFs from this index. Midcap ETF from Mirae Asset and Mid 150 Bs from Nippon India. Benchmark is Nifty Midcap 150 Index. Now for Mirae Asset, you can see today's volume 41 lakhs. It's a very huge volume. And also the last 3 months volume, you can see it's 23 lakhs. So this ETF is definitely having a very good volume. Considering it's a mid-cap, you need to ensure that it has very good volume. Okay. Now, the expense ratio is 0.05%. Now, for the next ETF, Nippon India, you can see today's volume is around 3.5 lakhs and last 3 months volume is around 6.5 lakhs. And the expense ratio is 0.21%. You can see the returns of the last 3 years of both the ETFs. There is not a much difference. Now, both the ETFs are good. You can invest in any one. But my choice will be Mirae Asset. You can see that's a very huge volume and very less expense ratio. Considering it's a mid-cap, please be careful that you need to have good volume. So in this case, my pick will be Mirae Asset. Again, you are free to choose anyone. Both are good enough to invest. Not investment advice or not a push from my end. Okay. Now, the fourth set of ETF is based on Nifty Small Cap 250 Index. Again, I have shortlisted 2 ETFs from this index. One is from HDFC and another one is from Motilal Oswal. Now, the HDFC ETF today's volume is 13 lakhs and last 3 months average volume is around 10 lakhs and the expense ratio is 0.20%. And that of Motilal Oswal, today's volume is around 7 lakhs and last 3 months volume is around 9 lakhs. And the expense ratio is 0.30%. Now here both the ETFs are good enough. You can invest in any one from both these two, but my personal choice will be HDFC. Now this is not investment advice. Both are good ETFs. You can choose any one. Okay. Now the fifth set of ETFs are smart beta ETFs based on momentum. These are based on Nifty 200 Momentum 30 Index. I have shortlisted 2 ETFs from this index. One is from ICICI Prudential and the other one is from HDFC. Now you can see today's volume for ICICI Prudential is around 8 lakhs and last 3 months volume is around 9 lakhs and the expense ratio is 0.30%. And for HDFC, today's volume is around 1,20,000 and last 3 months volume is around 2 lakhs. And the expense ratio is 0.30%. Now here in this momentum index, my personal choice is ICICI Prudential. Now you can choose from any one of these. Both are good ETFs. This is my personal opinion. This is not a recommendation. This is not a push from my end. Okay. Now see, all the 5 ETFs which I have discussed today in this video covers the entire or the majority of stocks listed on the Indian Stock Exchange. See, for example, the first and the second ETF which I discussed covers large cap stocks. That is, ETF 1 covers the first to 50th company and the ETF 2 covers the 51st to 100th company. Both this index form the large cap stocks. Now the third ETF which I discuss covers the mid cap stocks 101st to 250th company. Now the fourth ETF which I discussed covers the small cap stocks. The fifth ETF which I discussed covers the momentum stocks. This ETF tries to capture the momentum in the market so that you will be generating extra alpha on your portfolio. Okay? Now the very important point. Before investing in these ETFs, please remember these 4 golden rules. 1. You need to have 8 to 15 years and more investment horizon. Invest only if you have this longer time horizon. 2. Be prepared for 30 to 40% fall in your portfolio. Invest only if you can handle this volatility. 3. Treat market correction as an opportunity for you to invest more. At the time of market correction, please do not panic. Whenever there is a fall in the market and if you are having more cash, that's the right time to invest more. And 4, more important, do not stop your SIPs. Okay, clear? If you have watched this far, thank you all for your valuable time. See you in the next video.